Good morning, traders. Today we want to discuss the Fibonacci retracement that financial market investors must know. The Fibonacci retracement that financial market investors must know. Are you an investor? Are you a market participant? Are you a long-term market participant? Do you use Fibonacci retracement? There is a Fibonacci retracement that all financial market investors must know. In fact, even if you are day trading and swing trading, you must know, all right, that Fibonacci retracement level and what is happening around that specific Fibonacci retracement level. Hedge funds, all right, especially mutual funds, will invest around that Fibonacci retracement level. It's a powerful Fibonacci retracement level, and I will explain to you exactly what is happening. That Fibonacci retracement level, I've talked about it before, and I want to highlight it again today in a different way to get your attention, all right? Because if you are an investor, okay, the first thing that you do care about is to buy quality stock, quality currencies, quality financial instrument, all right? That's very important for you. You don't want to buy useless, all right, stock. You don't want to buy stock that are going nowhere, all right? You want to buy financial instrument of quality. Right? The second thing that is very important for an investor is to buy it very low at the cheapest price. So what we're talking about here, you need to understand. So when you talk to retailers, they don't like to use the word cheap. They like to use the word reasonable price, all right, discounted price. Because usually when they say cheap, it means that the price is low, but the quality is not good. So let's use the word discounted price. So it's not because a financial instrument is at a discounted price, at a low price, that one should buy it. All right. This is one mistake that a lot of investors are making. So, for instance, there are companies that went down, become cheap, and they stay cheap for life, and they are out of the stock market. And you don't want to do that. It's not because it's cheap that you must buy. It's not because it's below $5 that you must buy. All right. You do not have to. So the first thing you want to check first, is there a future for that financial instrument? So they are looking for the quality, they are looking for the price to buy it low, and they want to check whether that financial instrument has a future. So those are few simple strategies that investors are looking at. All right. It's good quality, it's now very cheap, and it has a future, a brighter future. So if we see a financial instrument that is good quality, which means strong balance sheet, creating product, all right, good quality, all right, belonging to a sector that is booming, all right, and we notice that now that stock is discounted, become very cheap, all right, and we look into their future. How are they dealing with the competition? Are they gaining more market share? Will they still be in business in 5 years? All right, and so on. And after that, what will happen? All right. So looking, then we check the future. Do they have a bright future? Those are the three things that are so important for the most sophisticated investors. But those sophisticated investors, financial market investors, try to buy around a Fibonacci retracement level. That Fibonacci retracement level is the 78.6% Fibonacci retracement level. But personally, I do not use the 78.6%. I use exactly 78%. So if you look on my chart, and very often that level has been useful for me personally. You can see that all the time the price does not go too far beyond that level, which is right here. You can see if you look at from here, 78 exactly. I don't use 78.6, though the real Fibonacci retracement level is 78.6%. And now here it is. I use all the time exactly 78% level. The reason why I'm doing that is because you see here what the price did. The price went below the 78% level, which is beautiful, by the way, and then returned back above it. When I see that, I know that, okay, this is nice. All right, it's very nice. It's rejected below that level. Now it's found its support, it returned back above it. Now let's see what we can do about it, which is great. So the hedge funds, the mutual fund, pension funds, all right, the private investors, the most sophisticated investors like to buy stocks, like to buy financial instruments around the 78% Fibonacci retracement level. You need to know. Why do you need to know as a day trader, as a swing trader, as a position trader? You need to know because you want to know how the market functions, and those investors, those market participants will move the market for a long time. They are long-term investors, and they will move the market in one direction for a long time. And you want to know what's going through their mind and where the financial instrument is likely to head. So are you, as a day trader, you are busy giving priority to bullish signal when you know that they are pushing it up, and you are busy giving priority to bearish signal when you know that they are pushing it down. All right? And as a swing trader, you do exactly the same thing. And the position traders who are also, okay, in technical investors are also buying around the same Fibonacci retracement level, the 78% Fibonacci retracement level. And you want to know. But remember what I said to you at the beginning of this video, because a lot of ordinary traders try to copy the smart investor or the most sophisticated investor trying to buy cheap stock, but they don't buy quality stock that become discounted at a reasonable price. They do not buy stock that, okay, have a future, and this is one of the mistakes that they are making. So I put it here right in front of you. First, check the quality of the financial instrument. All right, very, very important. And then if it reaches the 78% Fibonacci retracement level, it means that it's discounted 78%. So a financial instrument that is $100, for one reason or another, is now around $22. Beautiful. But also has a future, still has a future. Or they have excellent management in place that can push that business forward. It's not a mad management. All right. So therefore, the investors will buy. All right. So most of the time, the most sophisticated investor can also control the management of a company, putting pressure on them if they notice that, okay, I'm a long-term investor, I'm a big investor in this company, but the management is not doing a very good job. So they will put them under pressure, making sure that their investment, okay, comes good at the end of the day. So this is what's going on in the financial market. So now, as a Fibonacci traders, as a technical traders, we need to understand those things so we can make excellent decisions. All right, 78%. Though I'm on the monthly, on the yearly chart now, we can see that on the weekly chart, daily chart, it's going on all the time, 78% financial instrument coming down. But there is something going on this yearly chart here. Can you pay attention? So you can see that the price went up, first move all the way up here. So it went up from here, up, and then it pulled back to the 78% Fibonacci retracement level. Look, and then boom, they bought it up. Yes or no? They push it up, okay? Now, you need to understand what's going on in the financial market. Once they push it up, if the price breaks above, okay, the prior high, so they buy it here, and the price goes above the prior high, they are likely to start cashing out, taking their profit. If the price reaches which level? The 138.2% Fibonacci extension level of the prior move. So now they bought it at 78% when it becomes cheaps. Okay. Now when the price reaches, can you see the 138.2% Fibonacci extension level? Here it is. 138.2% Fibonacci extension level. Here it is. Now they cash out. Isn't it good to know what's going on in the financial market? So you do not fight the big boys, so to speak. All right. So you do not step on their feet, but instead you work together with them. All right. So here it is, they will take profit right here. Now, as the price is going down, they want to bring it back again. So now this time, as they bought, they are selling it here. Right? Sometimes some traders or even market participants get upset when I'm showing traders, I'm revealing some important secrets of the financial market to traders. They say, "No, you shouldn't be doing that." All right, I'll mark your video and I see some comment. Don't do that, because when more people understand the financial market, we'll have what we call a healthy market. Don't be afraid. All right. So now they start selling it here. They start taking profit. They start cashing out. They make their money, which is good, very important. All right? So if you have a pension, know that your pension funds want to invest and make money, which is good, yes or no? All right. So now as the price coming down, they will now again use Fibonacci retracement. Now for which move? From here. So price went up from here all the way up here. So it went up, yes or no? From here all the way up here. And then where do you think they're likely to take profit? They would like to take profit again at 78% Fibonacci retracement level of this new trend, up, down. So for traders who are area weight traders, understand that they are at 78% Fibonacci retracement level. It's a critical level. Usually the correction after a trend, for some stock, you will see, okay, this is why we talk about the characteristic of the financial instrument. Some stock will correct all the way to 78%, and then they will change direction. Why? So it's not a magic Fibonacci retracement level. There are reasons why some stock very often after a trending phase, when a correction has started, the correction will end at 78% Fibonacci retracement level. Because first, it's because the most sophisticated, what's going on? The most sophisticated investors, all right, are trading that financial instrument, all right, and they want to buy at 78% Fibonacci retracement level. But apart from everything there that I said to you at the beginning of this video, which means we want to buy for long term, we want to buy quality financial instrument at a discounted price, that company has also a future, all right? So when we are about to buy, those are the three things that we are paying attention to. There are more to it. Talking about, okay, the trading triangle, talking about the Google Asset test, all right? Those kind of verification that we do. But apart from those three things, there are other things that they are paying attention to. All right? Okay? So here, as you see now, so the price coming down and they are watching the 78% Fibonacci retracement level. So now you can see that we have what we call a trending phase, and then followed by what? A correction. For an area weight trader, this is an area weight cycle that has been completed right here. Now a new trend has begun from here all the way up here. Okay? And now again, a correction has started. And people will expect to buy here. But there is something else that those sophisticated investors are watching. What is that? I'm going to put it here for you, and you will promise me, that is to make you laugh a bit, you will promise me that you will never forget that. There's something else they are always watching. What's that? Think of it for a second. What's that? Guess it. If you guess it right, let me know in the comment section, all right? They are watching something else. I'm going to put it here. I'll change the color into red to make it very, very bright. They are watching something else. The market, my friend, the market. So a lot of investors know this kind of strategy, look for, all right, quality stock that become cheap, that has a future, that have a future, all right? But they are forgetting something very important. The market, the market. So those more sophisticated investors, smart investors, all right, watch the market. You can see that when a financial instrument, so you find a stock, good quality, that reaches the 78% Fibonacci retracement level, that has a future. But there is one more thing that you need to care about. Where is the market now? The market. So with those four elements, you can use your Fibonacci 78% Fibonacci retracement level, like the most sophisticated investors. Are you getting it now? So have you been buying for and hold and not making money? So check it out. So did you buy a useless stock that has no future? Or did you buy it too expensive when everybody was about to sell? All right. So did you check the market? Okay. So probably this will help you to start aligning things carefully, ticking the board, the 4 boss. Is it good quality? Tick the boss. All right. 78% discounted. Tick the boss. All right. Because that's where the hedge funds, that's where the pension fund, the mutual funds, the long-term investor will like to buy. Very often they like to buy. All right. But here, I'm going to show you something now. Stay with me. That's why I recommend to try to never watch any of our video halfway. All right. Very important. Now, if you are serious trader or investor, now, there is something else here. In my view, you see what's going on here? In my view, there's a high chance that this stock will come all the way here. It will not stop at 78%. Though people will try to buy here, it's a mistake. Where is the mistake? The market. If you look at the S&P 500, the Dow Jones, and all the other major indices, personally, all right, I can be wrong, but you will say, Joe, your wave count is wrong, and I will say to you, this is my wave count. Or I did not validate the market pattern. That's always for me to defend myself, or because traders spend more time arguing about wave count, okay, and I'm not getting into that argument at all. So now, one thing you need to understand, you see here, which year was that? 2008, okay? All right, 2008. It's a bearish time. So 2007 to 2008, it's a bearish season. So, but in 2009, the Federal Reserve started printing the dollar. So all these dollars were going to where? In the financial market. So though the price reaches that critical 78% Fibonacci retracement level after this trend here, all right, the market was still bearish. When you see that, so talking about the future and talking about the market, all right, the market environment was not suitable for those who want to buy and hold. If you are just buying during the bearish time, it means that you are quite a risky trader and you are a speculative trader. You may gain more because you are taking a bigger risk, but you don't want to do that because, especially if you are investing, okay, huge sum of money, or if you are trading for a firm, okay, that won't be, okay, very, very, okay, appreciated. You want to invest in a good market environment, in a viable market environment, all right? So though the price reaches the 78%, so you take the first ball, quality stock, 78% discounted. If the stock has a future, but the market is not yet ready. So in 2009, Federal Reserve started making policies that are now will push the market up. Now the timing is good. Boom, 2010, here it is. People start buying and it's running fast. Okay, you see? So apart from checking the quality, the 78% discounted, does the stock has a future? Does he have a future? Boom, yes, tick that box, and then now watch the market. Now here we are again looking at this stock. There was a trend, and now it's coming down, and we are approaching the 78% Fibonacci retracement level. That level is right here. 1733. That's the 78% Fibonacci retracement level of the price move from here to here. From here to here, we have another trend, and the correction is approaching the 78% level. Should you buy straight away when the price reaches this level? A lot of investors will do, but they are not sophisticated investors. But there's more sophisticated investors. I'm finding that word quite difficult to pronounce. You can correct me in the comment section. Try to say, George, oh, no, that's not the way you say it. All right, tell me below. All right, I would like to know. All right, so we can learn from each other. Okay, so I'm talking about Fibonacci retracement, and you can talk about my accent or something else in the comment section if you want to. So now, here we are, good quality. The boss is thick. It is becoming discounted. It's approaching the 78% level. Second boss soon will tick that boss. Does it got a future? Well, probably tick the boss. Now, looking at the market is now in the fifth area wave. What should we do? If, for instance, my friend, you buy it here, which is a speculative buy, you may be lucky and everything went beautifully. Now, if you are a very intelligent investor, you will be a little bit patient. So you will say, all right, let's see what the S&P 500 will do. Will it break above that critical resistance level and find a support and continue to run away after the election in the United States? So you say, wait for election to finish. Let's see the new policy that the new federal chairman or chairwoman, okay, will start. And will that be good for the stock market or not? Let's see what will happen. Okay, are we going to have a trend for the S&P 500 forever? So at this stage, personally, I will not buy straight away when it reaches the 78% level because I am a conservative investor, I'm a conservative trader. I will say in this case, I will demand that this stock come back to the starting point right here in the zone of $5. So probably you are a director of this company. You say, Joe, who are you to say to people to sell our stock all the way down there? No, my friend. I'm doing what we call a technical analysis. I don't tell people to go to the stock market to sell stock. All right, I don't do that. Please don't quote me on that. I don't tell people to go and sell stocks. All right. All I do technical analysis. I say to investors, what you need to look at is down to them to make their own decision. And also, remember, when a stock becomes cheap and has a future, there's no worry. Investors are waiting, especially investors with a deep pocket, are waiting to buy. That's why the pension fund, the hedge fund, love the 78% Fibonacci retracement level. So those are the few things you need to understand when you are trading or when you are investing in the financial market using the Fibonacci retracement. If you have any question or suggestion, my friend, this is the time to put in the comment section, and in due course, I will record another video to answer your specific question. We are the TSTWSYS008 traders talking about the Fibonacci retracement that financial market investors must know. Wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. Speak to you soon.